So what was it that helped boost Alibaba's results?
So this definitely set aside some investor concerns that Alibaba is being hit by some of these macro issues, like the slowing Chinese economy, as well as these escalating trade tensions. Now, this massive revenue growth was largely driven by new businesses like cloud computing, local services, entertainment. So if you really peel back and look at the bigger picture, some of their core competencies were slowing down. For instance, customer management revenue is what they charge for marketing fees to their retailers. That actually slowed down quite a bit. And also, if you strip out the consolidation of Ele.me, which is their food delivery business, and Cainiao, the logistics business, revenue growth was actually only 49%. That's still significant, but it's the slowest in 2 years. So yes, this was a great earnings announcement, but the question is how far and how deep will the margin pressure be as they invest in new businesses?
Where has Alibaba been investing outside this core business? I mean, tell us a little more about the food and food delivery.
Right, they really want to build this moat beyond e-commerce. They want to get into as many touch points of the average Chinese consumer's life as possible. So that means entertainment. They have digital streaming through Youku. They've been investing heavily in content there. In food delivery services, that is a hugely expensive battle that they're fighting. And they also recently announced that they're merging Ele.me and Koubei, their local services unit, and pouring $3 billion of capital into that with SoftBank. And the bet here is that by injecting more cash into it, it can better compete with Tencent's Meituan and Ping. So these are just a few of the areas. On top of that, there's also cloud computing. So there's a huge moat that Alibaba is trying to build. And it's great that they're trying to increase their addressable market, but it's also very expensive, and many of these areas are not profitable.
Now, I do have this chart in my GTV library showing how Alibaba's top-line growth actually exceeds Amazon when you're looking at revenue growth year over year. I mean, in so many ways, these are very different companies, but they're often compared, and in many ways, they are similar. You know, what can we take away from the fact that, in fact, Alibaba's revenue growth is pretty impressive when you look at one of the most valuable companies in the world and based in the United States?
Well, Alibaba has been described as not just the Amazon of China. It's also the Facebook of China. It has elements of YouTube, has elements of Netflix, and so many other services. So they have such a gigantic ecosystem that enables them to drive this revenue. They also have the added advantage of not having a ton of physical infrastructure that they have to deal with, which Amazon does, which is a big drag on their profit margins. But the bigger question is, as Alibaba invests in more offline, in more logistics, retail, and these lower margin services, how is that going to impact their future financial picture?